Morning, and thanks for tuning into the stocks to watch. Now, aside of the stocks that we've already discussed in the trade setup, and there are a couple of pockets that I want to tell you people about before we get to our guest. One, watch out for the defense stocks. We mentioned it at the end of trade setup about how, because of this new DPEPP, maybe some of that is a defense procurement policy. Maybe some of the defense stocks might be excited today. So be mindful of that. And I think this is a recent development about liquor shops on both sides of the road now being allowed to remain open. Maybe just maybe the liquor names, McDowell, United United Breweries, all of those could be active today too. So if they are active, you know why they are active. But the three stocks or three sets of names that I thought were important to talk today, and that's what we do today, are, as we said, Exide, the API manufacturers, and Dixon Technologies. And Mayuresh Joshi joins in right now to give us his thoughts on the same. Mayuresh, good having you. Thanks so much for joining in. Just a very quick 30-second view, Mayuresh. We've had strong 4 days of a pullback or a downtick. Could today be a day of a bit of a bottom buying kind of a thing?
Yeah, I mean, the global cues, Niraj, look extremely strong at this point of time. Nasdaq hitting an all-time high. The tech's doing phenomenally well in the US markets. So I think the upswing in our markets are not ruled out, but the volatility is here to stay. So I think that is how the markets will be. So I think it should be more of a stock-specific action that investors should probably have in these markets.
Okay, so then let's try and be stock specific. What did you make of the Exide numbers? The reported numbers were okay, but almost all brokerages that I saw seem to give a thumbs up. What did you make of them?
No, again, Niraj, what has come through in terms of the pandemic and the lockdown in Q1, I think that's clearly what is got played out, not just on Exide, but a lot of companies who are into the manufacturing space or consumer discretionary space as well. So I think the management was very, very clear in its commentary that the supply chain disruptions that were caused, the manufacturing disruptions that were caused, and subsequently, I think the entire sales and distribution chain, I think that obviously had a huge impact in terms of revenues. But I think what will go through forward is how they're trying to expect the aftermarket to probably perform. Because for a lot of these battery makers, Niraj, almost 50, 55, even 60 odd percent comes in from the replacement market. Now, as things are opening up, and a lot of vehicles could have been shut down or not started for some reason or the other, I think there is every possibility that the replacement market is expected to do well. And the second leg of battery makers business obviously comes through the industrial battery sales as well. So that is largely expected to remain extremely steady. So I think on the top line, I think the expectations largely is that these two segments might offset the OEM slowdown that we've seen. On the raw material cost, lead prices obviously are looking a little bit more stable on the downside at this point of time. So the margin performance in terms of both lead prices coming down and a lot of cost optimization that is initiated by these companies should start favorably playing out in terms of a positive operating leverage. And the initiatives that Exide is sells on the lithium-ion front, their JV that they have done with the Swiss company, what developments happen on that front, and also the entry into the e-rickshaws, the forward integration thereof. I think that is going to be very, very interesting going forward. So I think the sum of parts for Exide actually has the core business, which is the battery business, the insurance business, which has a reasonable amount of an embedded value in terms of the expected growth from the value of new business and the expectations of VNB margins holding up because of a better product mix, and a very marginal contribution because of the spending business. So again, I think there are positives that can be put forward. Numbers bad, I think expected by the markets. But I think we'll still wait it out because as per our cancelling methodology, I think we'll still be waiting for price strength to catch up, which might take some time.
Okay, so Mayuresh might wait, which will wait based on their strategy for some strength to come in before they buy. I think that's how they do it with their canceling approach that they do. Mind you, viewers, the notes that I read mention that the numbers are weak, but the valuations are undemanding. However, valuation can remain cheap for a really long time as well. Bear that in mind. Well, Mayuresh, where there is a significant run up and strength being seen are these API stocks, right? Suddenly everybody's talking about only one thing. That's API. What's happening here, and what is your thought about the granules, Laurus Labs, Solara, DVs, that whole clutch of stocks?
No, so again, Neeraj, what has happened with these API players? I think they've significantly got benefited since the pandemic has broken out from China. China is the largest manufacturer of key APIs, and they're very, very cost effective as well. So I think what the government has probably done in terms of a lot of initiatives that they've probably taken over the past few weeks, three bulk come up. There is a financial incentive of almost 7,000 odd crores that has got laid out so that a lot of companies domestically can be equipped in terms of the API manufacturing in-house, and the dependence on China probably goes out. So I think it's a medium to long-term process that probably goes out. But a lot of these players have benefited quite significantly, both in terms of the prices moving significantly higher and the volume growth sustaining as well. Now, it's a very, very difficult scenario to probably predict in terms of a lot of companies trying to back integrate their operations with APIs coming through. But a lot of these API players, as they are looking out for different sources apart from China, and depending also in terms of boosting their own internal capacities as well, I think that is a long-term positive from a medium to long-term perspective as well. The current perspective and the run-up and the vertical rise that we probably see for a lot of these stocks and the focus probably is gestating a lot of these positives that can probably come through. Now, a few of the APIs, the prices have gone through the roof, paracetamol, azithromycin. So I think what probably goes through in terms of both expected import duties going up and a lot of these getting built in-house, and a lot of domestic formulation players actually looking at the domestic players itself because of the Nirbhal scheme will be under tremendous focus in the medium to long term as well. But again, I think the run-up that we've probably seen and where the valuations are stacked up in terms of the next couple of years visibility, I think it's quite extended in our opinion, at least at this point of time. I think you have to pick and choose within this entire space itself and a mix of both APIs, a little bit of formulations, a little bit of intermediates,
Uh, we'll just try and repatch that. Mayuresh was getting to the crux, right, about what is it that he would choose because of the mix of things that he would want to see in that portfolio. Get that going. I think the rains or maybe some poor connectivity out there, and sometimes it happens, right, viewers? So you've got to bear with that. But watch out. Uh, the one thing that I would want to add to this, remember that some of these stocks, so the API companies, valuations even after the run up, are about 15x. Now, I'm not saying they are not cheap. Um, they are probably not expensive, is what I'm trying to say. They're not demanding valuations. And if the market sees growth, which these companies are showing, in times when the other pockets don't have growth, you might well see these valuations sustaining, probably moving up as well. So don't uh, what I'm trying to say is that if you look at the brokerage notes, a lot of them are pretty constructive on these stocks even after the run up. Mayuresh, sorry, you were saying that it's better to have a mix in your portfolio when you're looking at these API players. So would you want to elaborate on that?
Sorry, Neeraj, I think the network is extremely poor, so I could not make out anything that you were saying.
Okay, no, I was just saying you were just finishing your answer on APIs. Mm, no. Okay. Let me try and do this. Let's move on. We've discussed the API things in detail, right? Just one last question to Mayuresh Joshi, and that's on Dixon Technologies. I'll request my director or producer to bring up the graph of Dixon Technologies so that Mayuresh would know what I'm talking about in case he can't hear me. But Dixon results come out today. I think it's important to analyze what could happen to this stock because of the heady run up that it has seen. This stock has gone through the roof. It's 7968 at all-time highs yesterday. Mayuresh, what to do with Dixon Technologies ahead of results? I think we are at battery line. Let's leave it at that, unfortunately. Viewers, just keep in mind, I'll just leave you with this thought. We'll end this stocks to watch segment here, but just leave you with this thought that quarter on quarter, Dixon might show a dip in revenues, profits, because Jan to March was a full quarter, almost a full quarter. This was a disrupted quarter, so there might be a dip. The stock has run up quite a bit. The opportunity size is looking strong. Be mindful of that, but be mindful of the valuations that you're paying before you go out and buy a Dixon Tech. The results come out today. It's arguably one of the most important stocks to watch out for in the mid cap space. But Watch out for APIs, watch out for defense companies, watch out for liquor companies, and watch out for the market at large. Thanks so much for tuning in.